The Center for Housing Solutions and Community Initiatives presents the Hudson Valley Regional Housing Market Report for third quarter 2020. Starting off with the market snapshot for third quarter 2020, market data shows a competitive real estate market that has quickly gained momentum with significant increases in new listings and closed transactions over third quarter 2019, though inventory continues to decline with increased buyer demand. New listings in the third quarter rebounded after second quarter's pause. The region showed a 32.5% increase in new listings as compared to the same time last year. Every county showed more than a 15% increase year over year, with the largest increases in Westchester County with a 47.4% increase, Ulster County with a 39.4% increase, and Dutchess County with a 31.6% increase in new listings as compared to third quarter 2019. Closed sales showed notable gains throughout the Hudson Valley as transactions from pent-up demand in the second quarter made their way through the sales process. Every county closed more sales as compared to third quarter 2019. Sullivan County showed a 46.9% jump, which was almost 7 times higher than the total for the Hudson Valley region. Columbia also had a significant increase of 32.3% in closed transactions over the same time last year. The number of homes for sale continues its downward trend in the third quarter 2020, with 25.4% fewer homes for sale in the region as compared to the same time last year. The two most rural and northern counties in the region, Greene and Columbia, witnessed a significant decline in the number of homes for sale, down 42.3% in Greene County and down 37.9% in Columbia County. Orange, Rockland, and Ulster all declined by 30% or more. Months of inventory, also known as supply, was down 20% or more in every county of the region as compared to third quarter 2019, with the most significant year-over-year changes in Columbia, down 55.3%, and Greene, down 53.5%, bringing both counties into a balanced market. The tightest sellers markets are in Orange, with just 3.7 months of inventory, and in Rockland, with just 3.8 months of supply available. Constricted housing inventory and pent-up buyer demand once again pushed the median sales price up in every county of the Hudson Valley region, with fewer new listings coming to market during the COVID-19 pandemic, coupled with historically low interest rates and migration of New York City dwellers to less densely populated areas. Buyers are finding themselves in an incredibly competitive real estate market, creating significant upward pricing pressure. The median sales price rose for every county in the region this quarter, most significantly in Columbia, up 38.9%, Sullivan, up 34.5%, and Greene, up 30.9%. Westchester, Ulster, Orange, and Dutchess also demonstrated notable increases in median sales price. Westchester County witnessed an increase of $125,000, and Columbia saw a rise of nearly $100,000 in the median sales price. At the end of third quarter 2020, every county in the Hudson Valley region showed declines in inventory as compared to the same time last year. The region as a whole had 25.4% fewer homes available for sale by the end of September 2020. The most notable decreases in inventory were in Greene, down 42.3%, Columbia, down 37.9%, Orange, down 33.8%, and Rockland, down 31.3%. Looking back to third quarter 2017, the region was down 28.1% in housing inventory in third quarter 2020, with the largest declines in Greene, down 53.5%, Columbia, down 42.1%, Ulster, down 39.2%, and Orange, down 37% from inventory levels in third quarter 2017. Most of the region has experienced declining inventory levels over the last few years, with increasing competition amongst buyers creating upward pricing pressure. The inventory constriction has been further intensified in the Hudson Valley during the course of the pandemic, as remote work has allowed workers to locate further from employers, and buyers have begun seeking less densely populated areas, and interest rates have maintained at record lows. Inventory is a critical indicator for the housing market. The real estate industry considers 6 months of inventory a balanced supply, fewer than 6 months is considered a seller's market, and more than 6 months of available inventory is considered a buyer's market. In a seller's market, lower inventory levels and strong buyer demand create strong upward pricing pressure, resulting in increased home values. All counties showed declines in supply during the third quarter of 2020, with the Hudson Valley region's most northern and rural counties of Columbia, Greene, and Sullivan showing the most significant decreases in months of inventory, further indication that more people are moving out of denser urban areas and likely working remotely from a home office. Months of inventory in Orange, Rockland, Putnam, Westchester, Dutchess, and Ulster counties indicate clearly competitive sellers' markets with fewer than 6 months of inventory now available for potential buyers, which typically leads to increased buyer competition and increased sales prices. Sullivan County remains the outlier as it is still considered to be a buyer's market with 10.6 months of inventory. Analyzing the real estate market data for 2 to 4 family homes grants a broader perspective of the real estate market. Small multifamily properties may be owner-occupied with a tenant or tenants, providing additional income to offset the homeowner's housing expenses, or they may be purely for investment. Rental housing is in high demand as single-family home values have increased, which has led to increased value for multifamily units as well. Inventory continues to decline in all counties, with Putnam County down 52.9%, Orange down 19.7%, Rockland down 18.6%, and Westchester down 13%. Closed sales were also down across all counties reported. The constricted inventory may be partially responsible for the decrease in closed sales, though the impacts of the COVID-19 eviction stays and subsequent extensions may also be a factor. Decreasing inventory generally causes upward pricing pressure, leading to higher market values. However, multifamily properties could see reduced appraised values as the loss of rental revenue will impact the total value of the investment properties. Landlords may be heavily impacted as the ripple effect of the reduced rental income and extended eviction terms could impair their ability to maintain the property and pay debt service, putting them in danger of default. Explore the full Hudson Valley Regional Housing Market Report online at patternforprogress.org. The Center for Housing Solutions and Community Initiatives is hosting its 13th annual Hudson Valley Housing Forum November 16th through the 20th. The Housing Forum gathers leaders and professionals, virtually this year, from across the state to discuss trends and housing policy that impacts the Hudson Valley region. This year's forum, titled Housing Matters, Shelter from the Storm, includes dynamic national and regional leaders as keynote speakers and panelists for each day of the week-long event. Tickets are now available at patternforprogress.org/housing-forum. We look forward to seeing you there.